As the US-China trade war wears on, a new round of tariffs from both countries has kicked off. On Sunday, the US began imposing 15% tariffs on a portion of $300 billion worth of Chinese goods. And at the same time, China's first batch of retaliatory tariffs of either 10 or 5% also went into effect. Lynette Lim breaks down which sectors will suffer the most from this latest escalation in what has become a bruising trade war.
New U.S. tariffs of 15% will target mostly consumer products from China, including clothes, shoes and electronics such as smartwatches, televisions and printers. This means U.S. consumers will likely feel pain in this latest round of tit-for-tat tariff escalation. This is the first tranche of a two-part duty on $300 billion worth of Chinese goods. The next tranche, covering smartphones, laptops, toys and video games, will be levied on December 15. These tariffs are on top of the 25% tariffs already in effect. When fully imposed, all of China's exports to the US worth about $550 billion will be taxed. Meanwhile, from Sunday, China also imposed extra tariffs of 5 to 10% on a portion of $75 billion of US goods. This first tranche covered soybeans, cars, crude oil and pharmaceuticals. And the rest, to be taxed on December 15, will include American car parts, wheat and corn. At the same time, Washington is seeking public feedback on President Donald Trump's proposal to further raise the tariff rate on $250 billion of Chinese imports from 25% to 30%. He plans to time this on October 1st, the day on which Beijing will celebrate the 70th anniversary of the founding of the People's Republic of China. Mr. Trump has also linked the trade talks to the protests in Hong Kong, saying that he believes the trade negotiations had led Beijing to be more restrained in its response to the demonstrations in Hong Kong. Negotiators from both countries have planned to meet again later this month in Washington. Lynette Lim, CNA, Shanghai.